Yeah, good afternoon, everyone. Welcome to the panel, Baltic Companies Raising Capital Locally and Abroad, Challenges and Lessons Learned. We have a very interesting panel this afternoon, and myself as a lawyer had the pleasure to advise certain Baltic-based companies with regard to their issuance of debt and equity securities via their Luxembourgish investment vehicles. So please welcome together with me our esteemed panelists. So we start with Santa Purgaile from Latvia's Banka. Santa is the Deputy Governor of Latvia's Banka since 1st of January 2023. She was the Chairperson of the Financial and Capital Markets Commission. She's a member of the Supervisory Board of the European Central Bank, as well as a board member at European Securities and Markets Authority and European Insurance and Occupational Pensions Authority. Welcome, Santa. Then we continue with Uldis Cērps from Finance Latvia Association. Uldis is a senior financial risk professional with over 30 years of experience in leadership, executive and non-executive roles across central banking, regulation and financial market infrastructure. From October 1st, 2024, Uldis was appointed CEO of Finance Latvia, the primary advocacy organization representing nearly all banks in Latvia, along with leasing and other financial sector companies. Then we continue with Manfred Steinbeisser from Aalto Capital. Manfred has started advising Baltic business already in 2016, and since then more than a dozen companies followed his advice when raising money in the European and/or international markets. Manfred is managing partner in Aalto Capital, a pan-European advisory firm responsible for the entire debt and capital markets advisory team across all Aalto Capital offices. And then last but not least, Arne Aßmann, Capital Markets Director at Bankhaus Scheich, Wertpapierspezialist AG. Arne started his career in capital markets business in 1994 at HSBC in Germany and London, and has been with several smaller brokers in the last 20 years, focusing on financing European SME companies through the international placement of stocks and bonds and their listing on the Frankfurt Stock Exchange. Welcome all. Well, before we start with the question, I think capital markets is a very, very hot topic. We heard already this morning in the various panel sessions about it. Recently, various reports have been published, the Neuer report and the Draghi report, just to mention two of them. All of these reports were advocating stronger and deeper capital markets within the European Union, on the one hand to provide the necessary funding to SME businesses, but also to finance the green and the digital transition of the EU. Now, we are very fortunate to have someone from the regulator here today. And let me start, Santa, with the first question in that regard. How did the capital markets in the Baltics evolve in the last years? And are there specific initiatives from the central bank to support this development?
Yeah, hello everyone. It's my pleasure to be here today. And actually, after such a great speakers previously, I think it's very hard now to kind of compile what's actually happened during the last couple of years. But I would like to be on the positive side and more optimistic. So definitely, what we see that the bond market is growing. So we see interesting financing facilities like green bonds. We see also infrastructure developing. We have very nice digital platforms evolving. So to really kind of foster retail investor activity. What else? We see that Baltic markets, we've done quite a lot also from the regulators' point of view to align the regulation through the Baltic states. We've been in close cooperation with our colleagues over there. So, and actually already 3 years ago we started. It was still Financial and Capital Markets Commission. We started the 10-point strategy, how actually we can foster the growth of capital markets. And we were addressing the investors, the issuers. Also, we've been discussing a lot about, how to bring this liquidity activity into the markets with those publicly or like state and municipality-owned companies coming into the market. So, and we've been talking and talking, and then one can say, you've been talking for 3 years, and what's happened? But we see that, in equities, the market cap has dropped like significantly. But I should say that there is also some good and positive in that if with just one company exiting the market, we can see such a drop, maybe also with just a couple of newcomers coming into the equity market, we can really see the big uptake. So that's why I think we are building those blocks one by one, creating the infrastructure. And I truly believe that there will be this small turning point, very, very, in a very near future that will trigger, and we will see also not just bonds but also equities more actively traded here locally. So, and again, we as a central bank, as I said, we've been working for this 10-step program. We will come up beginning next year, also in a conference where we'll be going through what we have achieved and actually what we should do more to really kind of foster the growth of our capital markets.
But this program you just mentioned, is that a consequence of the Capital Markets Union? We heard about it already this morning, and also the Draghi report, or is that something separate, or is the program connected?
No, actually, if we look into the Draghi report, and actually there's no conference at all I've attended not mentioning the Draghi report recently. So there's nothing new in this report. It's just like it's clearly with the very trustworthy signature by Mr. Draghi, and this will give them more power to this report actually, and for European institutions actually to proceed to do what's already in agenda of different organizations for a while. But definitely this should be looked together.
Well, it's always interesting to reflect the measures of policymakers and also the regulator then with the opinion of the market, obviously. So maybe a question to you, Uldis, and then maybe later on to you, Arne. How is the market perceiving these measures? Obviously, they are making sense, but on a practical, operational level, how do you see these measures?
Well, thank you. First of all, I would like to start by saying that when it comes to the Draghi report, we of course strongly support the overarching themes of closing the innovation gap and increasing the competitiveness of Europe, and also preparing our union for digital transformation and decarbonization. These are very relevant aims, and not least in Latvia. And they are relevant for a simple reason, that if you do the math, and let's just take a couple of numbers, and I'll use intentionally billions just to see how things add up. So you have the energy policy until 2050, which will probably require something between 30 and 50 billion euros. You have the decarbonization agenda, which would probably require in the ballpark of maybe 10 billion euros. You have the digital transformation of both public and private sector. If you add all these numbers up, you easily end up in $50+ billion envelope for the next 30 years. It's quite clear that this envelope cannot be met by the banking system alone. These investment needs are far in excess of that. So that, to cut the long story short, this calls for a paradigm change. And I hope that the political system is fully aware in the Baltics of the need for the paradigm change, from the capital markets sometimes being seen as a nice-to-have thing to becoming a must-have. Because without capital markets, it's simply not possible to meet the transformational initiatives of our societies of the next decade, 2 decades, and 3 decades, full stop. So we're not talking about diversifying, financing sources for individual companies, which is also important. We're not talking about the possibility of getting lower spreads. We are fundamentally talking about the need to have, an instrument, not a spare tire, an instrument to allow a transformation of our societies unless we want to lag behind everyone big time. I think that is as simple as this.
Arne, do you want to comment further on that?
Yes, I would say, and I'm glad that you guys are optimistic and have already put so much effort into aligning and harmonizing the capital markets, not only here in the Baltics, but also throughout Europe. I mean, this is absolutely necessary, otherwise we are not competitive towards the Asian markets and also the US-American market. Keep in mind that in the 19th century, there were also great imbalances between the the single states within America, and that led to suboptimal funding for the companies and also reduction or some sluggish growth. But the Americans were smart enough and forceful enough to overcome this in the decades after, and now they're a power bloc with US citizens. I believe something like 50 to 60% they invest in stocks, bonds, or other securities, whereas in the EU it's roughly 30%. IPO market is double the size than in the entire EU. So given the fact that we as a broker, trading firm, and also the investors we look after, they depend on deregulated, free, liberal, aligned, harmonized markets. But they are, I have to say, realistic, because I believe the first initiative was launched by Jean-Claude Juncker back in 2014. That is now exactly a decade ago. And with the EU probably having other critical matters like immigration, rearmament, you name it, on the desk, some of them are pretty realistic. This could take another decade until fulfillment. But you have to make do with this. So every even domestic or local initiative that is created to attract more investments, on which we all depend, on which small cap companies, innovative companies depend, is highly welcome. But again, sometimes we move at a snail's pace or in crab walk, if you want to put it like that. But again, we have to be optimistic. That's what I like about it.
I mean, it's true that this morning we had the discussion about IPOs, and I think there are several European unicorns which basically then did their IPO not in Europe but in the US. And I think maybe that's a question for you, Uldis, because also our panel has the heading, are there any lessons learned regarding the steps which are necessary to increase the size and competitiveness, in particular of the capital markets in the Baltics?
Okay, so I'll start with a couple of things to be very precise. So one thing that is very important for us that has also appeared in many of the ideas in the EU around investments and savings union or capital markets union is the interoperability. I think for the Baltic issuers who want to access wider investor base, it's very important that post-trade infrastructures, I won't name the names, but that they should work seamlessly together so that investors who are having custody of their assets through one of their infrastructures can access, Latvian or Baltic securities seamlessly. I think that is one very specific, one super simple concept which I think should fly. Another idea is that we heard about the privatization of state-owned companies. So I'll give you a little bit of maybe diverging perspective. So we have currently, if we take Latvian example, just to be very specific, and there's been one boutique advisory house that has done the estimation of the value of state-owned companies in Latvia. So if we start from the top, it comes Latvenergo, roughly 4 billion euros worth. Next, Latvias valsts meži, 1.6 billion euros, and then everything else is below 1 billion euros in value. So I think it's very important to be aware how important, given these, and if we add all of them up, by the way, and I haven't done, this Excel sheet to the very bottom of, smallest state-owned enterprise that could potentially be, fitting in the market economy, exposed to free competition, I think it adds up to something around 8 billion euros. So it's not a gigantic amount. So my point is that I think politicians should be very careful, when they say that they want to have only a very limited, small size privatization of something little, I think they don't understand how important impetus this process can give. Because even if they do everything, it's just 8 billion, So my invitation is definitely to be more ambitious. But there's one interesting trend, which is one good thing and the one bad thing. One interesting trend that we have seen for the past few years that will, I think, give a real boost to public stock and bond market is that the management of state-owned companies, as you've seen here from earlier sessions, has become much more professional. So you already have a critical mass of really professional board members and managers of state-owned companies. So they are better prepared for capital markets, and they also can serve as source of good management and inspiration to other private companies. That's number one. Number two, I think the ESG agenda, the greening of our societies, has resulted in everybody, all companies across the board, becoming, I would say, much more ready for public market because they have already made a long step of being socially responsible, understanding their carbon footprint, understanding the importance of good governance. So I would say that this mega trend is making the step from private to public a little bit shorter. Now my final point regards maybe something that you've noticed, the Nobel Prize, which in economics went to another scholar of institutional economics, who himself has been the apprentice of Douglas North. And for those of you who know his theory, his idea is that markets can only become efficient if you have, low transaction costs. And from that perspective, I think it's important that our political system is very much aware how important it is to think of taxation in a sense of institutional theory. So if we wanted to support capital markets, the best thing would be to reduce the capital gains tax by 5 percentage points. Unfortunately, the initiative that is on the agenda of the Parliament of Latvia for next month is to increase it by 5 percentage points. So I just humbly plead politicians to think how important what they do is not only for the next year's budget, but the competitiveness of the country in the long term.
Yeah, thank you, Uldis, for that. That's very insightful. Maybe now let's do a reality check with Manfred. You as a financial advisor, you are acting as a bit of a Sherpa for many companies here in the Baltics, which said, well, we would like to go abroad because maybe the capital markets here are not deep enough, and we would like to find investors outside the Baltic countries. What are the main obstacles in reality you see in your, so to say, daily advisory business and the obstacles, let's say, these entities encounter?
Yeah, interesting question. I would say the main obstacles are definitely expectation. Yeah, I would really want to start with expectation. Yeah, I'm talking more now about the SME sector rather than about the blue chips or basically large caps. Because it's a long journey, and issuers, management, they need to understand that basically tapping into foreign capital markets requires some time. Time is required in order to introduce yourself to the company, to the market. That's needed because in the most of the cases, you are not really known when you, as a Baltic-based issuer, tap into the German market. And we have done it a couple of times. First of all, you need to explain many, many things. And the main question in the beginning is, why are you coming to us? And then you need to explain, because we need more than we get in the local market. We want to go to the international market because we have still a lack of institutional investors and so on and so forth. I think this is the main obstacle to start with such a project with the necessary patience. The rest, I would say, is pretty much the same, when in comparison to doing financing here locally. It's not a one-off exercise in our point of view. You need to build a relationship, you need to maintain a relationship. Yeah, and yeah, because capital markets is built on trust and on track record.
Arne, from a bank's perspective, how do you see that? Are there any specific do's and don'ts if Baltic companies are raising capital abroad?
Yeah, I'm glad, Manfred, you mentioned patient and the word not one-off, because I believe the worst thing you can do as a foreign issue, and this is not only limited to Baltic investors, but to all foreign investors who want to tap into a foreign market and make themselves heard there, is if you fly over Frankfurt, parachute down, hold a super sexy presentation, everyone is thrilled, you take the money and run, and nobody hears of you anymore. That's the worst thing you can do. So it takes patience, it takes investor education, so the capital market appearance presence should be embedded into a long-term investor relations, international investor relations strategy, otherwise it's not going to work. And I'm also glad you mentioned that you have to convince investors and answer the question, why are you coming here? Are you not getting any money in your home market anymore? We Germans, we think we are smart, which in fact we oftentimes are not. So and I remember that when we first roadshowed with a leading microlender here from the Baltics and tried to place a corporate bond, we ran into many bipartisan, prejudiced, reserved German investors who said, oh, how can this business model is never going to work? How can you charge such high interest rates to the poorer people? This is extortion, even racketeering. But after a couple of investor meetings, and then come again on a continuous basis, people warmed up to the story, and now we've placed, what, five different issuers with a potential share of German retail or semi-professional investors and smaller institutional investors in Germany, including the IPO of Eleving just a fortnight ago. So it all boils down to, I would say, the 6 Ps. Your capital market presence should be based on a persistent and promising PR, on the back of which you place your pragmatically structured security to the public, as well as in a private placement. And if markets are ornery and it takes more time, be patient, persevere, and in the end you will read pecuniary rewards for future progress. There was actually 12 Ps, but I mean, the message hopefully came across that it takes guts, it takes time, but there are investors in continent, in Central Europe, that are keen to learn more about the innovative companies from the Baltics and abroad. So it's worth the effort, that's what I wanted to say.
Maybe when I can just add here, Eleving Group, yeah, we have heard today in the morning a lot about Eleving Group and the case study held by Modesta Sudnius. Basically, we have been a part of the first bond issue of Eleving in the Euro market, not here in the local market. And the management took the strategic decision in 2017, early in 2017, to prepare themselves for issuing a bond in 2018. And that was a long journey because we needed to educate the market and we needed to figure out many, many things, because when you're a debit issuer, then the main question is, what price do we need to pay, or what price do we need to offer? Yeah. And actually, in the beginning, no one knows it. And therefore, you will figure it out when you interact with investors. And when you interact with many investors, then you get a certain feeling.
Well, I think one of the most important piece of your list is probably also the placement of the securities, because if you don't have investors, then obviously the whole thing is not working. But investors, they have also requirements. I think, Uldis, you mentioned that the settlement systems sometimes are fragmented, unlike in the US. Maybe a question to you, Manfred, because you are dealing with these issues very often. Are there any specific issues with regard to the settlement of the securities? What are the important points to observe regarding the market infrastructure? Is a single or dual listing preferable? What is your view on that?
I mean, you were mentioning, Andreas, settlement and clearing involved, which is basically the underlying infrastructure. We call it the highways, basically, And we have learned in the past that, unfortunately, within Europe, the highways are not yet connected. And therefore, you need to think how to get securities settled, which what means that you need to think how will you get the securities from the issuer to the investor, and how do you get the money back. It's improving, that's good. We have less headache now when it comes to Baltic issuers than some 2, 3, 4 years ago. The main challenge is that basically in Europe, you have Clearstream. In Europe, you have Euroclear. I would say these are the dominant players. And here locally, you have basically Nasdaq, or the settlement system is called Nasdaq CSD. And it was the challenge basically to think about the ISIN code. What ISIN code can be basically used that the local investors as well the international investors can have access. Now it's getting better because Clearstream and Nasdaq CSD, they have a link. And so here the communication is basically possible. My wish or my dream would be that Nasdaq CSD and Euroclear, they would have a link, in order basically really to make sure that regardless where the investor is located, as long as he likes the credit opportunity or the security, can invest. Because we had it a couple of times, especially when you're running around with a local ISIN, which is very convenient for the local investors, but not that much for the international investors, that international investors wanted to participate, but they had their security account in the Euroclear infrastructure. And we had to cancel the order at the end of the day because we did not find a way how to get it settled.
Which, by the way, brings us back to what we discussed in the beginning, this harmonization of the capital markets here in Europe, because there are countries around where you can only settle domestically, like Cyprus, for example. There are other countries that have problems with an international ISIN per se. So, there's a lot of effort we still have to put in there, because the demand or the interest, the appetite you create is not worth a penny if you can't settle the stuff. Keep this in mind, that after, let's say, 6 months of hard working on a project, knocking on doors throughout Europe, then someone in the end tells you, a hedge fund from London or from Brussels, oh, this is a domestic LV ISIN, or I don't really have a Clearstream account or Euroclear. This is another reason for them to shy away and say, let's wait for the next issue or so.
Then you were mentioning listening. Oh, sorry.
No, go ahead.
You were mentioning listing. I think here we need to distinguish between equities and debt securities, bonds. And I think this is a question which needs to be, an answer needs to be found once it is clear where the investor universe is basically based. In bonds, I would say it's probably less relevant. Where are you listed? In the equities, it's probably, it's not probably, it's much more relevant, and therefore it's a question which cannot be answered here in a very general way.
Uldis, please.
Just when I heard the long list of P's that you mentioned, I thought about another one, which is pan-European supervision. And from a perspective of a small country like Latvia, I think, given where we are, we sometimes can risk being too small being noticed, and that also goes for the Baltics. So as long as everything is standardized, I think people will feel that it's easier to get access. Because let's not forget, we are not China. I mean, I know many institutional investors are spending months, if not years, to set up all the systems to invest in China. But we're not China. People will not spend months or years, or maybe even not days, to set up trading possibilities in the Baltics. So as long as we want to have the maximum number of potential parties investing here, I think we need to make sure that everything is standardized, understandable, and the same. And that also goes for supervision. And I think we have seen tremendous success in single supervisory mechanism led by the ECB and national central banks like Bank of Latvia and the other two Baltic central banks has stabilized the investor perception of the banking system after the Greek crisis. It has served as a credible anchor to ensure that European politicians can set up the European financial stability mechanism, that they trust that the stability in country X would not be ruined by the lack of knowledge about the banking system. So those concerns have been addressed. And I think we need to give a serious consideration whether the success of ECB in establishing the single supervisory mechanism, it doesn't have lessons learned for the supervision of capital markets. And of course, we know for sure that you can't directly compare prudential supervision with market conduct supervision, and there maybe are legitimate concerns about the need to have a very close and responsive regulator, as Bank of Latvia certainly is. But I think we need to put this question quite high on the agenda, whether we as a small country should not benefit more, all other things equal, from a direct pan-European supervision, at least for some of the services.
Definitely would like to add on this. We've been discussing this issue also in different institutions, and the European Securities Market Authority is the one, actually. I'm also in the board, and we are kind of challenging ourselves. But I'm also a true believer that level playing field with the common united supervision might be of benefit. But there is one caveat. We really need to learn those lessons from the SSM, not to step on those mistakes we made there, and with careful calibration, selection, which to supervise from the one European perspective, but which companies still should remain locally supervised is very, very, very important. So definitely I'm the one who will say the calibration and really selection will matter a lot. So, and again, maybe when we still discuss the Draghi report and the CMU, again, I think this is about less fragmentation, harmonization you've been mentioning, but it's also not just about the infrastructure, like a physical, as you said, the highways. It's also about tax legislation. It's all about insolvency laws and all the other supporting legal framework where we are operating in. So this is very, very important, and we need to do everything to lower those barriers, those national barriers created, so to really have this money flowing back and forth throughout all the Europe. And actually those small countries as Latvia and Baltic states, we will be the first benefiting for that, from that,
absolutely,
Indeed, I couldn't agree more. I mean, Luxembourg, I'm from Luxembourg, so Luxembourg is even much smaller than Latvia. And the fact that we prefer to have a local regulator rather than going to Paris to get everything approved, I think that's indeed important for Luxembourg. And then on the other side, if you think about distribution of securities, be it under a fund or an issuing vehicle, and you have a prospectus which then, once approved by one European regulator, can be passported to all the other European countries. I think that's an enormous achievement, and there you can see how distribution of security works from a legal point of view, so to say that each investor can purchase the security. But if the settlement is not really working and we have fragmented settlement system, then that's an infrastructure problem we need to solve. But maybe let me come back to, so to say, we talked about the listings. Arne, from your point of view, because we talked about dual listings, if we have, for example, a listing here, for example, in Riga, Nasdaq, but if we have also a listing in Frankfurt, what is, in your point, in your view, what is the advantage there?
I believe that the beauty of a dual listing in Frankfurt, or let's say Central Europe, is you create more awareness for your story, for your company. I just mentioned the shyness, the reservedness of some German or German-speaking investors towards foreign companies, foreign business models, although this is often not justified because they're very innovative and they're very clever people around. But as I said, you need to educate them and you need to break down all the barriers, psychologically speaking, that could put them off from investing in your company. And one great step towards tapping into these investor bases is a dual listing, because if you, it sounds a bit stupid or funny, but if you look at the map of Europe, you see the Baltics, they're somewhere in the right-hand corner, Germany in the middle, and there are investors who say, oh, I don't really have access to the Baltics. We discussed, we have tax problems, our brokers will charge us tremendous fees. Sometimes we run into settlement problems if we don't have the right ISIN. So, but if we have a listing on the ground, we feel much more comfortable. We can associate much more with the business model, also because we have seen these guys before running around in Frankfurt and other places in Germany and Europe. So that is probably the main reason why a dual listing is preferable. Yeah?
And the local listing, sorry when I had to add this, and the local listing builds also the bridge to the retail investors around the stock exchange. This is a big advantage when you basically, when a sizable company would go for a bond issue in Frankfurt, even though it is from Latvia, it doesn't mean that basically the retailers here have necessary access. Most likely not. But when you basically list then the same ISIN code, the same securities, then here locally, then suddenly the retail investor base, they have access.
Yeah. But keep in mind that the dual listing is not worth anything if you don't do a continuous IR, PR campaign there on the ground. Yeah, because there are a couple of, I believe something like 20 Baltic companies dually listed in Frankfurt, but that was initiated by some local brokerage company that wanted to play around with this arbitrage against Nasdaq in the Baltics and so forth. This is not what I meant. I meant a sponsored dual listing that goes hand in hand with road showing on a continuous basis, educate investors, and then in order to give them comfort and also increase liquidity in the German market, then seeks a listing in Frankfurt, preferably in the highly regulated, transparent prime standard or general standard and so forth. Which is easy to accomplish, by the way. It's not rocket science, but it's doable, yeah. And you can, over the long run, you can reap good rewards, like a sustainable fan-based community that if you tap an existing issue or if you come to the market with a new security, they will be much more easily convinced and ready to open up their pockets.
I mean, we have talked now about bond issuances, also about IPOs. Maybe a question to both of you, Manfred, Uldis. Do you see any reasons why it is more challenging for a Baltic company to issue a bond or an IPO compared to companies from other EU member states in Central and Eastern Europe?
Well, if I have to start, I think the brief answer is that for bond investors, probably no, except for the fact that, because of the interoperability of the settlement and post-trade infrastructures, you might have a more limited investor base. You saw that from those charts that many investors in the Baltic bonds, especially smaller issues, smaller size tickets, were local. And the second, I think the big obstacle really is that when it comes to equity IPOs, that there are very few equity IPOs, and it is probably a very direct result of the fact that the privatization of state-owned companies hasn't happened to any significant extent. If you do the math, I mean, if you are a super optimist, let's suppose you are a super optimist, and you think that all state-owned companies in Latvia which reasonably have the prospect of being listed will be listed, to full extent. You end up at having a market cap of 8 billion, which in relation to GDP is something around maybe 17-18%, something like that. And it's still not 100%, but it is a boost. So I think that's probably the other thing that we need to be completely clear, that the absence of privatization and on floating of those companies on the stock exchange, a significant share of those companies, I'm not talking about 5% or 3% or 10%, floating, let's say 20 or 25 or 30% of those companies on the stock exchange is a big factor. The absence of this process is a big factor that keeps back markets from developing. And every single day that passes is evidence of the, keeping this structural disadvantage. And the question becomes whether policymakers want to keep this structural disadvantage or address it. That's an open question to me.
Just to add a bit to complement all this, because specifically to boost the retail investors' involvement, we need this boost with the state-owned, municipality-owned companies, because this might be a very good start here locally to start investing. And then, if you have started, you gain your financial literacy, and then, it's much more easier to get this traction when the other companies comes in, and the investors, and retail investors in particular, are more advanced, more knowledgeable doing so.
Yeah. Actually, you need a big bang like Maggie Thatcher initiated in the UK in the mid-1980s, was it, I believe, yeah. But it takes time, but the goal should be to move just in that direction, yeah?
Yeah, one more thing that is, you asked what keeps back. I think what keeps back is the uncertainty, another P, personal taxation. I think uncertainty about, I mentioned this before, but I think it's still important topic. If people who are actively investing and have capital gains are learning that their tax rate is changing from year to year, and it's not changing downwards, but it's changing upwards, I think this is a real hurdle for growing the investor base.
Well, maybe we have received questions from the audience which relate to the tax points. So maybe I asked the question to the group, but maybe also specifically to Uldis. But then obviously anyone can speak up. So the first question is, how do you assess from the perspective of the investors the last actions taken by politicians with support of supervisors to impose taxes and blaming profitable businesses just for being profitable? Maybe a bit provocative question, but maybe Uldis, do you want, or can you say something to that?
I'm more than happy to talk about it. I don't know how much time do I have.
We still have some time. Huh?
No, but I think this is an old school of thought that I think originated in Hungary or maybe Poland during the previous administration. That if you have large, preferably Western-owned companies who will obey the law, it's very convenient to tax them specifically. And I found it principally very, very kind of problematic when, on the one hand, politicians are saying that, when they meet fintechs and startups, they say, we love them, we love you, please grow bigger, please develop, please become a unicorn. We need, I think, the governor of Bank of Latvia said we need one unicorn in the next 4 years. But when these companies become big, what happens then? So then they are taxed specifically. Well, seriously speaking, I think these individual targeted taxes are not good practice. I mean, I can just quote what IMF has recommended to Latvia and all other countries in respect to industry-specific taxation, that this is not good practice and it should be avoided. But at the same time, we need to be realists here in the Baltics. I mean, just look on the map where we are. And when we have increased demands for national security, we have increased demands for defense, so they have to be figured, we have to figure out how to finance them because these are legitimate expenses. My only concern is that it's probably not the best of ideas to pick certain sectors and maybe to design tax in such a way that it directly hits the largest companies, which happen to be Western-owned, and to tax them specifically. I think that's not best practice according to IMF, and I can just say that I share this view.
There is another question on tax as well. So You talked about capital gains, tax levels as a hindrance, and a possible tax hike coming up. Any talks on introducing the Swedish ISK system in any of the Baltic states as a way to solve it instead?
Well, investeringssparkonto is a fantastic idea. So the idea there, for those who don't know, is basically that you pay a fixed small tax rate every year, and then you can do, you can invest in any kind of asset classes where you want. I think Latvia has a similar tax regime, and Sante can talk more about it because I've been, I haven't been in this country for a while. But the idea is basically that you only tax the profits when you take out the money. So I think these are all good ideas, but maybe may I suggest something, because when I read the Capital Markets Union or Investment and Savings Union proposals, many of them were kind of, people were having a question mark almost after every idea whether it's doable. Some, of course, things are not doable. You can't create a global reserve asset in Europe because you simply have, national government bond markets. But what you could do perhaps, and this comes back to my previous question, and I will stop here, but I think it's quite important, you could create a pan-European instrument similar to ISK, investeringssparkonto, or any similar idea, which also would have a pan-European, fully harmonized tax rate. And you know that this tax rate depends on pan-European decisions, which don't change year from year depending on where on the political spectrum your government stands and how dire the budget needs are. So a harmonized instrument and a pan-European tax rate for individuals. I think if you create these two factors together, it can become a very, very powerful force to drag in more people in investing.
Yeah, I would totally agree. It's great that you mentioned this, especially when it comes to the German market and German investors. We don't really have an equity or investment culture as comparable to the Swedes or to the Americans. Currently, there are something like 5 billion in private savings, boringly stored on some treasury accounts that never make it to the market. And it's not only the lack of education or experience of the past, it's also cumbersome tax authorities, regulations, and so forth. And this needs to be aligned no matter where you invest in Europe. Currently, I believe 90% of all the literature on tax evasion out there on this planet is written in the German language, and the Austrians and Swiss are rather smaller countries, population-wise, in contrast to us Germans. So there are in Germany, on the local ground, domestically, there are steps to alleviate this a bit. There's a Finance for Future, not Fridays for Future, but Finance for Future Act becoming law probably in the next couple of weeks. But that tackles the problem only peripherally. So I believe you're absolutely right. We need to solve this on a pan-European, EU-wide basis. Otherwise, it will remain difficult, clustered, and fragmented.
Maybe before we wrap it up, because we are coming close to the end of the panel, maybe a question which was already asked this morning, but maybe Santa, you can briefly respond to that. How are the geopolitical risks affecting the Baltic markets in view of the fact that they have always been present for the past 30 years?
I think in those geopolitical circumstances, the best we can do now is to make sure our economy is growing. We are getting stronger. We have, we can gain, we can earn. Our economy can, support all those needs we need. Rather than taxing something, we need to create the economy going and, producing the monies for all those needs for us to become stronger. And definitely we need to be as united all together as possible in this particular situation, more than ever.
Very good. Yeah, I think there is nothing to add to that. Maybe indeed to wrap it up, question to all. Maybe we start with Arne, but then please feel free to add your thoughts as well. How do you see the midterm development of the Baltic capital markets?
We are very positive because we have seen from the past that there are very smart entrepreneurial people and business models around here, which we dual listed in Germany. And as the harmonization and alignment of the European capital market goes forth, even though it tends to be a bit slow, in my opinion, there will be great opportunities out there for German investors, but also for Baltic investors. So I am very positive. We must do it, otherwise we're going to be always lagging behind the Asians and the Americans.
I would agree. And I think we should also turn it around and to say, okay, what has already happened? Yeah, I have met in Vilnius Nasdaq the first time in 2012, and there was basically nothing sizable or nothing tangible here. And when we look now back, what has happened the last 10 years, I would say in the Baltic capital markets, there are many positive things happened. We just need to continue.
Yeah.
I'm also moderately positive, but to continue on what Arne, remember you mentioned about the US railroads, the whole story about financing this initiative, which was far bigger than banking system in the US at that time was capable of providing financing for. All the reforms that happened with the national mandate and license, but you know, there was one particular item which bears additional relevance to that story, and that item is that there were dedicated investment banks who considered, you know, developing investment banking as their core business. And I think in the Baltics we need more banks of the type of Signet and LHV who have designated this as their core specialization, because they will drag into this ecosystem more investors, more competitors, more listed companies, you know, and just create a market. So I think that's what we need.
I definitely will remain positive, and well, I believe that we have. Each of us has this own building block we are creating together, the capital market. So each and every of us should take their own responsibility to make sure that I'm doing my best to create this my building block, and then, you know, have those sticking together glues, then we can, you know, really create the common capital market. But it's all about, like, there's no one silver bullet to solve this. It's just like building this together.
Well, thank you very much. I think it was a very interesting discussion about the challenges and the lessons of Baltic companies raising capital locally and abroad. It's a large topic, so thank you also to the audience for the questions, and to the panelists for the interesting discussion. Thank you.
Thank you.
Yeah.